Welcome to the deep dive. Today we're focusing on Intuitive Surgical. Most people know them, right? The pioneers behind the Da Vinci systems.
Absolutely. Really revolutionizing minimally invasive robotic surgery.
Exactly. And their Q1 earnings for 2025 just came out April 22nd. We've got the report here.
Yep, hot off the press.
So what we want to do today is really dig in. What are these numbers telling us about Intuitive's direction and, the impact of their tech?
Precisely. It's more than just the financials, isn't it? We need to unpack the really significant bits. What does it mean for surgical tech?
Right. It's about understanding the health, the trajectory of this company.
Yeah, kind of a shortcut to grasp where things stand.
Okay, let's jump right in then. The Q1 2025 report. Let's start high-level overall financial performance. How'd they look?
Pretty strong, actually. Revenue hit $2.25 billion.
2.25 billion. Wow.
Yeah, and that's a solid 19% increase compared to Q1 last year. That was $1.89 billion.
Okay, 19% growth. What's driving that?
Well, it seems to be a mix. Definitely more procedures being done using their systems, plus more system placements. A bigger overall installed base of machines out there. Growth on several fronts.
Got it. And what about the bottom line? Profitability.
Also looking healthy. Their GAAP net income, that was $698 million, or $1.92 per share. That's up quite a bit from $545 million, or 1.51 per share in Q1 2024.
And they also give us non-GAAP numbers, right? How did those compare?
They did. Non-GAAP net income was $662 million, or 1.81 per share,
Uh-huh.
compared to $541 million, or $1.50 per share last year. So growth there, too.
Okay, maybe quickly explain that difference again. GAAP versus non-GAAP. Why both?
Sure. So GAAP, generally accepted accounting principles. It's the standard set of rules, makes comparisons between companies easier.
Right, the official standard.
Exactly. Non-GAAP, though, lets companies adjust those numbers. They pull out certain items they feel don't reflect the sort of core day-to-day business performance.
Like one-off things.
Yeah, often things like stock-based compensation, maybe amortization of assets from acquisitions. Intuitive does this to give perhaps a clearer view of ongoing operational profitability. It's another lens for investors.
Okay, that makes sense. So moving beyond the financials, the actual usage, how many surgeries are happening with these machines? Procedure growth.
That's really a core metric for them, shows adoption. And worldwide Da Vinci procedures, they climbed by about 17% compared to Q1 last year.
17%, that's substantial.
It really is. It suggests robotic surgery is just continuing to gain ground, becoming more standard practice in many areas.
And it wasn't just Da Vinci, was it? I think I saw something about their Ion system, too.
Oh, absolutely.
Yeah.
Ion procedure growth was, well, frankly, staggering, up 58%.
58%.
Yeah, huge jump. It really indicates that Ion, which is focused on things like minimally invasive lung biopsies, is gaining serious traction. It's becoming a really important growth area for them.
Wow. Okay, so more procedures naturally means more systems are needed. What about system placements? How many new machines went out?
Also positive signs there. They placed 367 Da Vinci systems in Q1 this year.
Okay.
That's up from 313 in Q1 of 2024. But, the really big story here is a new Da Vinci 5.
Ah, yes, the latest generation. What's happening there?
The uptake has been incredibly fast. They placed 147 Da Vinci 5 systems just in this last quarter.
147, how does that compare?
Well, compare that to only 8 placements in Q1 of last year.
Just 8. Wow, that's a massive acceleration.
It really signals a major upgrade cycle is kicking off. Hospitals are clearly seeing something compelling in this new version. Maybe it's better imaging, new instruments, workflow improvements. Hard to say exactly without more detail, but the demand is obvious.
Definitely. And what does this do to their total number of systems out in the world? The installed base?
That keeps climbing too. The total Da Vinci installed base grew 15% year over year,
Mm.
reaching 10,189 systems by the end of March 2025. A year ago, it was 8,887. So their footprint is definitely expanding.
And I noticed a point about operating leases. More hospitals leasing instead of buying?
Yes, that trend seems to be continuing, maybe even accelerating a bit. In Q1, 198 systems were placed under lease agreements.
Mm-hmm.
And interestingly, 107 of those were usage-based leases.
Meaning they pay per procedure.
Essentially, yeah, pay
Ah.
based on utilization. That's up from 159 total leases, 94 of which were usage-based in Q1 last year.
What are the implications of that leasing trend?
Well, for hospitals, it can lower that big upfront cost, right? Makes adopting the tech potentially easier, maybe for smaller institutions too.
Right, less capital needed immediately.
And for Intuitive, it shifts revenue. Maybe less lump sum up front, but potentially more predictable recurring revenue streams over the life of the lease can actually help spread the technology faster.
Interesting dynamic. Okay, so we have more systems, more usage. Let's break down the revenue itself. Where's the money coming from specifically?
Well, the biggest chunk, as usual, is instruments and accessories. That grew 18% to $1.37 billion.
And that's tied directly to the procedure.
Exactly.
Yes.
More Da Vinci and Ion procedures mean more demand for those consumables. It's that classic razor and blades model, essentially. Very important recurring revenue.
Makes sense. What about selling the actual machines, systems revenue?
That's a nice bump, too, up to $523 million from $418 million last year, directly linked to those higher placements, especially the Da Vinci 5 driving that.
Got it. And the third leg, services.
Services revenue also grew, hitting $363 million compared to $313.5 million. That just reflects the larger installed base needing support, maintenance, training, and so on. All three revenue streams showing healthy growth.
Okay, so sounds like a very positive picture overall. How's their financial health looking? Do they have plenty of cash?
Oh, definitely. They ended Q1 with a very substantial cushion, $9.1 billion in cash, cash equivalents, and investment.
9 billion, that's a lot.
It is. And they actually added $269 million to that pile during the quarter, mostly just from cash generated by their operations. So yeah, they're in a very strong financial position, gives them lots of flexibility.
Any key messages from the CEO, Gary Guthart, in the report?
Yeah, he sounded pretty positive. He highlighted the solid performance, obviously, and expressed satisfaction with how customers are adopting their platforms. He specifically mentioned the strong interest in the Da Vinci 5, and he reiterated their focus: better patient outcomes, better experiences for patients and care teams, lowering the total cost of care, and improving access. That's kind of their core mission statement.
Right, framing it around value for the whole healthcare system.
Exactly.
Okay, so looking forward now, what are they projecting for the rest of 2025? What's the outlook?
For the full year, they're projecting Da Vinci procedure growth of around 15% to 17%.
15 to 17%, still strong, but maybe a slight tick down from the actual 17% they saw in Q1. And I think they hit 17% growth in 2024 as well.
That's right. It is a slight moderation in the forecast range compared to last year's actual growth. Could be several things, really. Maybe the market has been maturing slightly, maybe some economic headwinds affecting hospital spending, or maybe they're just being a bit cautious. Something to watch.
Definitely. And what about profitability margins going forward? I think I saw something about pressure there.
Yes, that's a key point in the outlook. They expect their non-GAAP gross profit margin to be in the range of 65% to 66.5% for 2025.
Okay, how does that compare to last year?
It's down. They achieved 69.1% in 2024.
So a noticeable decrease expected. Why?
They specifically called out tariffs. They estimate tariffs will negatively impact that margin by about 1.7%, plus or minus maybe 30 basis points.
Right, tariffs increasing costs.
Precisely. It increases their cost of goods, basically. And they added a warning, too, if more tariffs come into play, especially impacting, say, China system sales or their global supply chain generally, the hit could be worse.
So global trade dynamics are becoming a tangible factor in their finances.
Clearly, it's putting pressure on profitability, even with strong revenue growth.
And despite that pressure, are they still planning to invest? What about operating expenses?
Seems so. They're forecasting non-GAAP operating expense growth of 10% to 14% for 2025.
Okay.
Which is pretty similar, actually, to the 10% growth they had in 2024. So it suggests they're not pulling back on investments in things like R&D, sales, marketing. They're continuing to fuel the business.
All right, so let's try to wrap this up. Key takeaways seem to be really strong Q1 growth, revenue up, procedures up significantly.
Especially that huge jump in Ion procedures.
Right, and the incredibly rapid adoption of the new Da Vinci 5 system. That's a big one.
Huge. Signals a major upgrade cycle. And they're financially very solid, tons of cash.
But there's this emerging challenge with tariffs starting to bite into their projected profit margins for the year.
That's the perfect summary. Strong demand, impressive innovation uptake, solid financials, but now navigating these external pressures like tariffs.
This was really useful. Unpacking all of that gives a much clearer view of where Intuitive stands right now.
Definitely. And it raises some interesting questions, doesn't it?
Like what?
Well, thinking longer term, with this rapid Da Vinci 5 uptake and the base just getting bigger, how fundamentally different will surgery look in, say, 5 or 10 years because of this tech?
Yeah, how much further can it reshape things?
And on the flip side, what are the big strategic challenges for Intuitive? How do they manage these global trade issues, maintain that profitability, while still innovating and expanding access?
Good questions. Lots for our listeners to think about regarding the future of healthcare tech, investment, and of course, patient care itself.
Absolutely. Worth keeping an eye on Intuitive and maybe digging a bit deeper on their website or looking into robotic surgery trends more broadly. It's a fascinating space.